Hello, and welcome back to another video. In this video, we are going to speak about the STD and D2S flips. So what is S2D and D2S is basically just the supply to demand and demand to supply flips. So let's get on to that without wasting any more time. Yeah? So let's first discuss about the S2D flip, or we can simply also call as supply to demand flip. So what is the flip? Flip is basically when one form changes to another form. So you see that we are coming in a downtrend, creating lower lows and lower highs. In downtrend, we have seen that we have supply because we have a bearish move, breaking some previous structure. That the last up candle before the down is our bearish order block we have seen now. So this is your supply, the price comes back to the supply, mitigates the supply and goes down again. This move breaks this lower low. The last up candle is your supply. The price comes back, the supply mitigates and goes down. So we see a nice bearish trend is going on, mitigating supply, a bearish order flow is there. And at one point, what do you see here? Now, this is most important thing, what we expect the price to do. The price should come here, mitigate the supply, and should go down. That's what happening till now, right? But here, in this case, what happened? The price just breached our supply. It just went above the supply. Basically, it got respected here. It got respected here, but it failed in this supply. The price just mitigated and, just directly broke the supply. And what does that mean? That means, the sellers who are in control till now, mitigating the supply and taking the order flow downwards, those sellers are no longer in control. Now, okay, the market have breached all the sellers, and the buyers have made to a very strong extent, okay? The buyers have entered in now. So, when the buyers entered in, what happens? The demand enters, okay? So you see here, this is the move. This is the move that breaks the supply. So what happened? The move started from at the low. So the last down candle before the up move that breaks a supply and even a structure is your demand. So this is the same move breaks your supply and the demands also entering in the same move. This is called a flip, okay? And what happens when the demand enters? We know market will come down, mitigate the demand and create a new higher high, break the previous high, create a new high. Now again, we will have one more demand here. Price will come back to that demand and create another higher high. So you see how a downtrend completely changed to an uptrend just by flipping a supply to a demand. Okay, this is called the supply to demand flip. Let's also look at the demand to supply flip. Now you see here what's going on. The market is going up in upfront here. Okay, so we have a clear upfront here. What you can see. Yep, so market is growing up, mitigating the demand, creating another high, mitigating the demand, creating another higher high. So we have clear uptrend. All the demands are getting mitigated. So what do we expect the market to do now? We expect the same thing to continue, come here, mitigate the demand, and go and create a new higher high, right? But here you see what happened. The price just breached your demand. It just broke the demand. It got respected here. It got respected here, but it failed here. Okay, this demand didn't got respected. The market just, went past your demand. What does that mean? That means that buyers who were in control is no longer in control. Now the sellers have completely overtaken the buyers here. This move has a lot of sellers entering, so the last up candle before the down mode that breaks your demand or breaks a structure is your supply. So the same move breaks your demand and the supply enters in. Now what will happen? Market will come up, mitigate the supply, and go down. Create a lower low, break the structure, create a lower low, a new supply here again, come up, mitigate supply, go down. So you see how an uptrend completely changed to a downtrend just by breaking a demand and supply. And this is why the flips are so important here. So when we have a flip, we have a change in the trend also. Okay, now this can be a temporary trend also because, the main trend changes when it breaks some structure. We have seen multiple times in the previous thing, okay? When we have a break of structure only then. Let me just go to that. You see only when you break lower lows and then you break goes down only when you break a lower high, we change to an uptrend. A downtrend changes to uptrend by breaking a lower high. And now, what we have seen a downtrend can change up and even by breaking just the supply, okay? So this is so important here. Now let's see some example on how a flip can change that trend. So here we are at one of the time frame of a chart, and you see, Here we are in a downtrend, mitigating the supply. So mitigating the supply and going down. Okay, so down. So we are creating lower lows and lower highs and completely trending to the downside. Okay, at one point, what happens here that we have this whole area supply, and this supply, you see, is not respected market. Should come here, respect the supply and go and create a new lower low, right? That's what should happen. But what happened here, the move, just break your supply. And this is the move that broke your supply. Okay, so the last down candle is here. You see, this is last down candle before that. Up move, which broke your supply, but this becomes your demand. Now, okay, because we are in downtrend and we break a supply and we start an upfront, the move that breaks your supply, you have the demand in. But this is the move here. This move broke your supply, and the last down candle is this. Market company gets the demand and starts going up now. Okay, so let's see. So you see market completely shifted the trend from a downtrend to an upfront just by breaking the last supply. Even the last structure is here. Also, the stock supply is also broken here. Okay, so this is called a flip. Let's try to see if you can get more. Example. Yep, you see here. So market was going in up front. Here you see a new higher high, break the structure, the last down, candles. This one is your demand. Market comes, mitigates, goes up again. This was a new higher high. This was broken. Now this is new higher high. This was broken by this last down candle. You see, price comes back, mitigates again, goes up. Okay, now this higher high is broken. Now your new higher high is here. Okay, so the last down candle is this one. You see, this also gets mitigated and goes up. Okay, at every point, even here, also you see the higher high is broken, a new higher high is created. The last down candle is this one price comes back to get so a clean, what we see here, a very clean demand get. Demand's getting mitigated, and market is going up. Okay, but at one point, what happens here, you see this demand initially got mitigated, but it didn't go up and create a new higher high, right? It should come here, mitigate the demand, and should go up, create a new higher high, but that didn't happen. It just went here and broke that demand. When the demand is broken, what happens? The supply enters in, and now here we have multiple supply. Of course, the actual supply is this one. This is the supply that breaks your demand, but we have more supply here, also the top. Also a supply. This supply didn't work, but this supply does work. And market now shifts to downtrend, you see. Okay, so this is where the flips are most important. So you see an uptrend when a demand is broken. A downtrend starts. Or you see a downtrend, and when a supply breaks, an uptrend starts. Let's see. Okay, we are down to only... Let me show you more examples on the as the pictures. Okay, where all the demand and supply flips just works. So I have put some more examples here. Now this is also a demand to supply flip. Now, what you can see clearly, an uptrend is in control. Market is just knowing uptrend, the last higher high was here. So basically, which down candle created this up move? Basically this down candle, this red candle here. So this was your demand. I have drawn by. You can see the blue box here. Now you clearly can see that this move breaks your demand. You see the actual break of this was a low of the demand. This was broken by this day on move. Okay, so this is the download that broke your demand completely. So the last of candle would be this up candle that broke your demand. Now this becomes your supplier. Okay, so this is the move. Focus on the move. This is the move that breaks the demand. So the last of candle for this down move is this one and not this one. Okay, so you see, this is your now supply, and market comes to supply, mitigates supply, and you see market just goes down. So an uptrend completely went to a downtrend just by breaking the last event and mitigating the first supply. Okay, let's look at more examples. So this is also the demand to supply this, another demand to supply. Flip you can clearly see here. So we went clear up front here. So the last higher high was this. And which move created this higher high? This particular move. Okay, so we can clearly see that, this is the move that created this particular higher high. So the last down candle is this one, so this is your demand zone. And now I have highlighted that demand by the blue box. Now you see this big move into the market that breaks your demand completely. Okay? You see the big move enter the market that breaks your demand. Now we have seen in the, let me show you again. Okay, so when we see a move breaking your demand, okay, where the move starts, the first up candle before the down move is your supply. We've seen here right now, compare this one here, and you'll see the clear, and this is the move that broke your demand. So the last of candle is this whole clean candle. This is your supply. And you see market comes back up with the case supply and starts going down a complete downtrend. Now this is the exact flip. So the flip ensures that the market have changed the trend. Now, okay, let's see one more example. So this is a supply to demand flip. Okay, you can see market is coming down now. Or a previous example where demand to supply flip. This is a supply to demand flip. Now you see the last lower low is here. This is your last lower low, the last up candles that created this whole move. Is this one you see by the red box? Now this high of the supply was exactly broke by this move. Okay, the one green candle you see here. Okay, so this was the move that broke your supply. So the last down candle is this one before that. This becomes your demand. So, okay, so you see a supply broke, demand starts, and now market come back to mitigate the demand and just goes up. This is the flip. So flip means the market shifts a trend from supply uptrend to downtrend or in downtrend to uptrend. Okay, so now just go on the chart and do some practice. Make sure you can go on any chart, any time frame. But let's do some practice of these flips before proceeding to the next video. So that's all for this video. I will catch you in the next one. Thank you.